Good morning. I'm Andy Myers at Weiss Research, and this is your morning market update for Thursday, November 17th. Jen Amos is off today. Stocks on Wall Street are little changed in early trading, following heavy losses yesterday. Stock futures had indicated a much lower open earlier, but some positive data on the employment front helped the market reverse course. The number of Americans filing first-time claims for unemployment insurance fell again last week to 388,000. Economists had been expecting the number to rise slightly. In addition, the 4-week average of jobless claims, a more accurate gauge of employment trends, also dropped to below 400,000. Both numbers are the lowest they've been since early April. Economists say the 4-week average will have to stay at these levels for an extended period to indicate a healthy pace of hiring. Meanwhile, the housing market is also starting to show some signs of improvement. New construction dipped by just 0.3% in October, following a revised 7.6% jump in September. Economists had been forecasting a big decline, and building permits, a leading indicator of housing construction, surged 10.9%. That was much better than expected and its highest level in a year and a half. But while there may be some reason for optimism on the U.S. economy, investors are growing more fearful about the economies of Europe. The yield on Italy's benchmark 10-year government bond is rising again today to around 7.25%. Traders say those interest rates are unsustainable, and Greece and Portugal were effectively shut out of the credit markets when their benchmark bonds hit similar levels. But it's not just Italy that's in trouble. Fear of contagion is hitting borrowing costs in Spain and France as well. The yield on Spain's 10-year note hit a Euro-era high and is now nearing 6.7%. And even France, considered one of the Eurozone's healthiest economies, saw its interest rates rise by 0.5 percentage point at its latest debt auction. Despite those concerns, the euro is regaining some ground this morning, rising back above 135 against the US dollar. But we're seeing the biggest moves in the commodity markets. Crude oil is giving up some of yesterday's big gains, now trading around $101 a barrel. And gold is dropping by $30 to around $1,750 an ounce. On the corporate front, keep an eye on shares of Sears Holdings. The retailer posted a wider loss in its latest quarter than the same period last year, and sales also declined. Shares of Sears are tumbling more than 6% on the news. Williams-Sonoma is also losing ground despite a mostly positive earnings report, and Gap will release its quarterly numbers later today. We're seeing big declines from a couple of technology companies that reported after yesterday's closing bell. Shares of NetApp are sliding 10%, making it the worst performer on the S&P 500. Profit at the data storage company topped expectations, but sales fell short of Wall Street forecasts, and NetApp's outlook for the current quarter also missed estimates. Meanwhile, Applied Materials posted a decline in its fiscal fourth quarter profit due to soft demand in its solar and electronic display businesses. Those shares are losing nearly 4%. That's the latest from Weiss Research. Have a great trading day.